Hey everyone, welcome back to Corporate Decoder, the place where we dig into the nitty-gritty of corporate filings. Today, we're looking at Diginex Ltd, a company that's trying to make a name for itself in the world of environmental, social, and governance, or ESG. That is, helping companies be more environmentally friendly, treat people better, and have good governance. It's like they're trying to decode the corporate world and helping companies do it too. The shares will be sold at whatever the market decides, so prevailing market prices or in privately negotiated prices. The people selling the shares might pay some fees to brokers or dealers, but that's their business. Now for the interesting part that I mentioned earlier. Diginex is practically begging you to read the risk factors section because these are their words. The future sales of ordinary shares by existing shareholders, including the sales pursuant to the Resale Prospectus, may adversely affect the market price of our ordinary share. So let's take a look at some of them. One major thing to look at is the risk of doing business in Hong Kong. Diginex has some significant operations in Hong Kong, and they're worried about the Chinese government getting more involved in businesses there. You know, the kind of intervention that's been happening with Chinese companies listed in the US basically. If the Chinese government starts tightening the screws, it could mess with Diginex's ability to operate, raise money, and even stay listed on the Nasdaq. It's a real threat. They even say if those type of China decisions go bad and it does cause them significant damage, they may be forced to relocate our operations outside of Hong Kong, which is going to add more expenses to an already struggling enterprise. Diginex acknowledges that the Hong Kong legal system could change. It says Hong Kong embodies uncertainties which could limit the availability of legal protections. They are walking on thin ice as one bad law there, and their company may be facing some big problems. Diginex even mentions they have controlling shareholders. So what? Well, it might limit your ability to influence things as an investor, and that can impact decisions about mergers, consolidations, and the sale of all or substantially all of our assets. If you are a minority shareholder, you are at their mercy. There's also risks associated with this status as an emerging growth company, which is a special category for smaller companies where they don't have to follow all the rules that bigger companies do. It makes it harder to compare Diginex to other public companies because they are able to avoid certain regulations, with Diginex being clear. This could make it more difficult to compare our performance with other public companies. And finally, the filing admits that Diginex's share price could be extremely unstable or volatile. And we already discussed that with the news of this report being sold is not going to settle things down, and Diginex knows it. Admitting that if some bad news hit, they may be involved in a class action suit, it could divert a significant amount of our management's attention and other resources from its business and operations. There are tons of more issues that are more company-specific, like the fact that the company's based in the Cayman Islands, which might make it harder to protect your rights as an investor. They say you may have difficulties in protecting your interests. And they aren't exactly swimming in cash. As of September 30th, 2024, they have a bit more than $100,000 in cash. That's not a whole lot to run a global business. And here's the kicker. The auditors, the folks who check the books, have substantial doubt about the group's ability to continue as a going concern. That means they are not even sure if Diginex can stay in business. This comes from a combination of what we talked about, having net current liabilities plus the accumulated losses. So how does Diginex plan to turn things around? They are betting big on their suite of products, which includes Diginex ESG that helps companies make ESG reports, Diginex Climate which helps companies calculate their carbon footprint, and Diginex Lumen which analyzes a company's supply chains. They're also offering consulting services with Diginex Advisory, where they help other companies with ESG strategies. It's also worth noting that after the offering, the directors, officers, and main shareholders of Diginex will own about 37.9% of the company's stock. Meaning it's not all that widely spread, and as the filing says, these shareholders will be able to control the management and affairs of our company.